Meet Mrs. Watanabe. She's not just your kind and caring Japanese neighbor. She's a hard worker since she's responsible for handling everything in her house, from the finances to the kids to Japan's economy.
Mrs. Watanabe. Mrs. Watanabe.
Yes, that's right. Mrs. Watanabe can control Japan's economy and even influence the global economy. That too from her own living room and an old laptop. Now, you might be wondering, who is this Mrs. Watanabe? And how can a Japanese housewife hold this much power over economies? And is your neighbor secretly shooting for world domination? Let's rewind to the 1980s in Japan, when their economy was booming. The stock markets were flying high and Japan's economy was growing exponentially thanks to strong exports, government spending on infrastructure, and low interest rates. By the end of the decade, Japan was the world's second largest economy after the US. But then came the 1990s and Japan's economic bubble burst. The real estate and stock markets crashed, wiping out trillions of yen in wealth practically overnight. Suddenly, the mighty Japanese economy was on its knees, kicking off what's now known as Japan's lost decade. But little did anyone know, Japan had a secret weapon up its sleeves. And that secret weapon was Mrs. Watanabe. You see, she's not just a regular housewife, she's also a savvy investor. When the Bank of Japan decided to lower interest rates to help the economy, many wondered what exactly interest rates are. Well, think of them like the price tag on borrowing money. When interest rates are high, borrowing money becomes expensive, but when they're low, it's cheaper to borrow. Lower interest rates make people more likely to spend money, which can give the economy a boost. 2 strategies for reviving the economy. Based on this assessment, the Economic Strategy Council believes that a new economic system of Japan needs to be built in which people will be able to recover confidence toward the future. To this end, fundamental structural reforms in both the public and private sectors are indispensable and require strong political leadership, entailing a bold review of all existing systems without exception. Without them, reviving the Japanese economy is hopeless. However, despite these efforts, the Japanese economy continued to struggle, and people weren't seeing much growth in their savings. Enter Mrs. Watanabe. During these tough times, something unexpected happened in Tokyo. Mrs. Watanabe, although not a real person but a term representing the average Japanese housewife, became a symbol. Japanese households traditionally save a lot of money, and these ordinary housewives were no exception. These housewives were tired of their savings just sitting around in banks, not growing much. They wanted to find a better way to make their money work for them. So Mrs. Watanabe and her friends came up with a clever plan. Let's imagine you're in on this plan too. You borrow $100 from your friend Mark, who only charges you a little bit of interest because he's not looking for big returns. Then you lend that money to your friend Leo, who's willing to pay you more interest because he's investing in riskier stuff. After a year, you pay back Mark the $100 you borrowed, and you're even on that front. But you've made a profit from Leo's higher interest rate. So you keep the extra money as your reward for being smart about where you borrowed and lent money. This clever strategy is known as the carry trade. Mrs. Watanabe and her friends were essentially borrowing money in a currency with a low interest rate, like the Japanese yen, and investing it in a different currency with a higher interest rate, like the Australian dollar. The difference in interest rates allowed them to earn a profit known as the carry. By scaling the strategy up with large amounts of money, these housewives were able to significantly increase their savings and make a substantial impact on the financial markets. It was a win-win situation for everyone involved. Quote, "I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful." Warren Buffett. Her success wasn't just hers alone. It inspired housewives all over Japan to start doing the same. Suddenly, regular folks were taking charge of their finances and making them work harder. Carry trading allowed Mrs. Watanabe and others to increase their wealth without needing specialized financial knowledge, fostering financial independence and empowerment among housewives. However, it also carried risks, including exchange rate fluctuations and changes in interest rates that lead to losses when they weren't managed carefully. Moreover, reliance on carry trading for investment returns may result in overexposure to market volatility and missed opportunities for diversification. Now, let's talk about cash. In Japan, people really love cash. More than half of all household assets in Japan are held in cash or bank deposits. That's a lot of money just sitting around. Unlike in other places where people might invest in stocks or real estate, Japanese folks tend to keep things simple and safe with cash. But as they say, don't put all your eggs in one basket. Cash provides liquidity and stability, making it easily accessible in times of need and reducing the risk of losing money in volatile markets. However, keeping too much cash can mean missing out on potential investment opportunities and inflation eroding the value of savings over time. Additionally, low interest rates on cash holdings may not keep up with inflation, resulting in a decrease in purchasing power. Picture a storm brewing in the financial world. That's exactly what happened in 1998 when the Russian financial crisis occurred. It all started when Russia found itself drowning in debt and couldn't pay it back. This caused banks to collapse and inflation to skyrocket. Investors everywhere started to panic, scrambling to find safer places to stash their cash. The Russian financial crisis had its root in a series of economic and potential missteps. After the collapse of the Soviet Union, Russia embarked on a path of economic reform. But the transition was rocky, corruption was rampant, and the government struggled to manage its finances effectively. To make matters worse, a decline in oil prices hit Russia's economy hard, leading to a sharp drop in revenue. As investors sought refuge from the chaos in Russia, they turned to Japan, drawn by its reputation for stability and robust financial institutions. The influx of capital into Japan initially provided a boost to the economy, driving up asset prices and fueling economic growth. However, this sudden surge in foreign investment also led to unintended consequences. The influx of capital caused the yen to appreciate sharply, making Japanese exports more expensive and hurting the country's export-driven economy. Additionally, the rapid increase in asset prices created concerns about the formation of asset bubbles, which could pose risks to financial stability in the long run. So, while the influx of money into Japan provided a temporary respite from the turmoil of the Russian financial crisis, it also brought its own set of challenges and disruptions to the country's economy. The once promising carry trade strategy, which had seemed like a ticket to financial success for Mrs. Watanabe and many others, soon turned into a nightmare. As the value of the yen increased against the currency she had invested in, losses began to mount. Remember Leo representing Russia in our earlier example? Well, when the Russian ruble crashed, it sent shockwaves through the carry trade market. Despite the attractive interest rates Russia once offered, the plummeting value of the ruble meant that Mrs. Watanabe's investment suffered massive losses. The combination of the yen's appreciation and the ruble's collapse resulted in losses amounting to billions. With the currency market in turmoil, Mrs. Watanabe found herself facing an uphill battle. The surge in the value of the yen made it increasingly expensive for her to repay her loans. What was once seen as a pathway to financial freedom had now become a burden. The sudden turn of events not only affected Mrs. Watanabe and her household, but also had ripple effects on other companies and households that had followed her lead. In April 1999, Japan implemented a zero-interest policy, becoming the first country to do so. However, instead of revitalizing the economy, this move led to a new set of challenges: deflation. With prices expected to fall further, people held back on spending, exacerbating the economic stagnation. To combat this issue, Japan introduced a policy known as quantitative easing. In 2001, aimed at stimulating economic growth by injecting money into the economy. However, despite these efforts, Japan continued to grapple with the complex challenges of deflation and economic stagnation. Quantitative easing, or QE, was a significant move made by the government during challenging times. It involved creating new money to buy government bonds, which injected cash into the economy, lowered interest rates, and aimed to stimulate borrowing and spending. Other countries also implemented QE during crises such as the 2008 financial downturn and the 2020 pandemic. QE brought about a pivotal shift in the approach of the Japanese government, particularly impacting the strategies of the Bank of Japan. For individuals like Mrs. Watanabe, QE introduced a new layer of complexity to their financial journey. While the lowered interest rates resulting from QE offered the potential for increased profits from the carry trade, the memories of past risks and losses remained fresh. Despite the introduction of QE, the carry trade continued to persist in the market. However, many Japanese investors remained attracted to the carry trade strategy. The allure of potentially higher profits, especially amidst declining interest rates facilitated by QE, proved difficult to resist. Despite Japan's economic challenges over the years, the appeal of carry trade remained steadfast. Around 2005, a noteworthy trend emerged as a significant number of Japanese housewives began venturing into online currency trading, also known as day trading. These women, typically in their 30s and proficient with computers, engaged in Forex trading using their personal savings or borrowed funds through margin accounts. Their growing prominence even generated media attention, with stories highlighting their experiences, such as a 2007 article in the New York Times spotlighting middle-class Japanese homemakers trading currencies in their leisure time. It was a day that shook the world. September 15, 2008. The financial fortress of Lehman Brothers, a titan of Wall Street for over a century, crumbled. With assets totaling a staggering $619 billion, the bankruptcy filing marked a conclusion to the catastrophic mortgage debacle. But Lehman's downfall wasn't merely a tremor, it was a seismic event that reverberates across the globe. As Lehman Brothers collapsed, shockwaves rippled through the entire financial system. Stock markets plummeted, witnessing trillion-dollar losses, and panic swept through the streets. It was a domino effect. Countless individuals faced the grim reality of job losses, home foreclosures, and vanishing savings. Once bustling neighborhoods turned into ghost towns, their vibrant energy replaced by an eerie silence. Factories fell silent as unemployment rates soared, leaving many families struggling to make ends meet. Amidst the chaos, the interconnectedness of economies became glaringly evident. The repercussions of the crisis were felt far beyond the borders of the United States. In Japan, the surge in the value of the yen prompted a swift response from investors like Mrs. Watanabe. Forced to sell their holdings at a loss, many retail investors across Japan felt the sting of the crisis. Yet amidst the turmoil emerged a new trend, the rise of day trading. Day trading is when people buy and sell stocks or currencies in one day. Instead of holding on to investments for a long time, they try to make quick profits by trading quickly. After the 2008 financial crisis, regular Japanese investors like Mrs. Watanabe started doing more day trading instead of their usual trading. Day trading is more aggressive and lets them make their own decisions about what to buy and sell. This change led to more women getting into trading in Japan and around the world. During this time, some traders became really famous. One of them was Takashi Kotegawa, who people called the god of Japanese day trading. When he was in his 20s, he once made a crazy $400 million in just one day of trading. His story was an inspiration to many. If you want to hear more about Takashi Kotegawa and other traders like him, let us know by liking and subscribing to our channel. In 2013, Japan was dealing with economic problems once again. The country had a lot of debt compared to its economy, and prices were falling instead of rising. To tackle these issues, the government led by Shinzo Abe introduced Abenomics. This plan combined different strategies to boost the economy, including using money and government spending to stimulate growth. During this time, people like Mrs. Watanabe, along with many other Japanese families, had a lot of savings. The world started paying attention to her financial decisions because Japan proved to be an important player in the global economy. And Mrs. Watanabe adjusted her investment strategies. It became clear that regular folks like her could have a big impact on the financial markets. Even today, Mrs. Watanabe continues to be influential worldwide. With advancements in technology and easy access to trading platforms, she and other everyday investors can now try their hand at day trading. Mrs. Watanabe's courage, adaptability, and resilience in the face of uncertain markets, politics, and the economies are truly remarkable. Her story is inspiring because it shows how an ordinary person can make a real difference in the global financial world. Thanks for watching this documentary. We hope you enjoyed it. More exciting stories are coming your way. Stay tuned and don't miss out.